let's take a look at another mover, and that is Nokia. Shares on the move this morning. The telecom company releasing its Q3 earnings report, missing Wall Street expectations, but it does expect to see normal seasonal improvement in their network business next quarter. You're looking at losses of just about almost 10%. Now, Nokia also announced plans to cut 14,000 jobs. That's about 16% of its workforce, and that's going to happen over the next 3 years. So we take a look at this company, the lackluster results here. They don't expect a market recovery soon. They're seeing weak demand for their 5G equipment. They posted a 20% drop in third quarter sales. So yes, when you take a look at that longer term, I guess some of the commentary that they made just about the business division could be a bit encouraging here, but clearly, like you're looking at with the stock reaction today, shares off nearly 10%, and the CEO saying that mid to long-term market things look okay, but that short-term, what exactly that looks like, clearly a very challenging time for Nokia.
Yeah, some of the high-level kind of bullet points that the company pointed out here. Q3 net sales declining by 15% year over year, constant currency 20% reported. Enterprise net sales grew 5%, but this really just comes back to this gross margin decline that they saw as well here that is going to impact jobs, already has, based on the announcement that they've made and what's been acknowledged here, and there's 14,000 jobs that are going to be cut. That comparable gross margin decline was 39% here, and due largely to the decreases that they saw in mobile networks. And so even as we think back to some of the cuts that have taken place at the start of this year and cuts now that are being made at companies like Nokia, where they are seeing some weakness in specific parts of their business, especially in that mobile networks business, where there had been perhaps over-hiring that took place at a certain point of the labor market dynamics. And now you see more of the propensity for companies that have some of the larger margin hits like this to quickly make the decision on a headcount adjustment front instead of trying to figure out, okay, what is the larger kind of implications if this continues, if we do see continued weakness in the mobile networks division, because that mobile networks gross margin, it improved a little bit seasonally, or that's at least sequentially due to some favorable regional mix. But again, that operating margin declined by about 8.5%. A lot of these margin pressures that the company is seeing reflected directly in this decision to make some of one of the most drastic cuts that I think we've seen over the course of this year in terms of total figures announced.